Hello everyone, welcome to today's lecture. So today we are going to talk about audit of banks. Okay, so as you know, whenever we start a topic, we discuss, okay, what is an audit of the banks, why we are, studying this, what we will be going to do, what areas we are going to cover. Okay, so before I can jump into the topic, I just want to understand, a few things about this particular topic, and then want to explain that, okay, how that is covered, what we are going to see in this particular topic. Okay, so let's say for example we have a ABC Bank Limited. It's a listed entity. Okay, it's a listed entity, ABC Bank Limited. Now I just want to understand, guys, you tell me which are the laws that will be applicable to this particular entity. Like, for example, if this is a listed entity, okay, what basic laws and regulations you think that will be applicable to this entity? And that's a very important question. Reason because this will form the base for our discussion for, going forward, like whatever provisions we are going to discuss. Very important. Good morning. Okay, very good. So the laws and regulations that will be applicable will be, one, it's a bank, so Banking Regulation Act. Then it's a company, so Companies Act. Okay, then it's a listed entity, SEBI regulations. Okay, and being a bank, okay, under Banking Regulation Act, whatever powers were there to frame the rules and applicable directions that were given to RBI. So RBI has issued directions that will be applicable to them. So basically I can say, Banking Regulation, Companies Act, SEBI Regulation Act, RBI directions, all these will be applicable to this particular one entity. Okay, now if all this is applicable, under which particular act, it is prescribed that I will, have my format of balance sheet and P&L. So if I want to, talk about financial reporting framework, what will be the financial reporting framework applicable to ABC Bank Limited here? What will be the financial reporting framework applicable to this bank? Which financial reporting framework will be applicable to this particular bank? Okay. Okay, so my question is from the point of view that, like, for companies, we have a Schedule 3, Division 1, Division 2, Division 3 for NBFCs, for this particular thing, for this particular entity, it's an, Companies Act is applicable to this particular entity. SEBI regulations are applicable. Which particular financial reporting framework will be applicable to this entity? Correct, Rashmi? Correct, Boni? And you guys have already studied that. You guys have already studied that. So the schedules, remember, we used to study about the schedules, various schedules for the financial statement of, while preparing the bank. There were the schedules given. Now, now, if those schedules are given, okay, if those schedules are there, under which act it is falling? So they fall under the RBI directions. Schedule and format of FS is given under RBI directions. Okay. Now, so that's about the schedule and format of financial statement. I can say somewhat financial reporting framework. Now, second part comes is where does or which applicable audit reporting framework will be there. Like for example, in companies we use section 143. Okay, the items prescribed under section 143 are used for the reporting. Assets are there, then Caro is there. So whether, first of all, we'll go one by one, whether reporting under section 143 will be applicable for this entity. Whether 143 will be applicable. Good morning. Yes, it will be applicable because it's a company. Although it's a bank, it's a company. So reporting under 143 will be applicable. Okay. Now, Caro. Will Caro applicable? Will Caro will be, that will be applicable to this particular entity? Is Caro applicable to this entity? Okay. And whatever your answer can be, just also provide the reason. Good Boni. Good Soham. We have discussed particular Caro point, in our previous lecture. Is CARO applicable to this particular entity? Pretty simple. Correct, Shailendra? Okay, good, good. So with respect to CARO, yes, CARO is not applicable because there is an exemption. Remember, when we discussed CARO, we talked about a particular exemption. Banking company, BIOS 8, that banking company is exempt from CARO. So CARO is not applicable. That I know now. Okay. CARO is not applicable for reporting. Then the next question comes is whether whether reporting for internal financial controls, IFC, is applicable. Whether reporting for IFC is applicable or not. No, Shailendra, there is a specific exemption given for the CARO, that CARO will not be applicable. Although 143 is applicable, but CARO is not there. So whether IFC reporting is applicable, answer is IFC reporting is applicable. Yes. So correct, Rashmi. Correct, Shailendra. IFC reporting is applicable to this particular entity. Okay. Because it's a company, it's a listed one. Okay. And it falls under the definition and criteria prescribed in the Companies Act. So yes, IFC will be applicable. Okay. Now, why I am discussing all these things? Okay. The purpose of discussing all these things is that when I will be, explaining you a particular provision, that okay, why we are discussing the particular provision, where it is coming from, you should guys have a clarity, where and why this reporting is required to be done. Now, when I talk about the audit, it's not only audit, it's about, checking in appropriate. Whenever we say, it's an audit, we talk about, whether entities financial statement give a true and fair view. Also, we talk about, whether they have complied with the relevant financial reporting framework. Here, the financial reporting framework is not prescribed only under one particular act or legislation. Rather, there are many such things which we need to see and we need to check whether they have complied with or not. Okay. So that's why it's very important for us to understand, okay, which particular act, which particular provision will be applicable to this entity or to a bank compared to, the other entities, so that we can check, we can verify whether the financial reporting framework has been complied with or not. I hope I'm clear. Any doubt till now? Any doubts? Okay. If no doubt, let me show you one example of an audit report of a particular bank which is listed, like this example that I took for you guys, which is a bank and which is listed company, so that you can have a clarity that how it is actually it is reported. Just give me a minute. Okay. So this is an auditor's report, independent auditor reports of a particular bank. I'm not promoting any particular bank or I'm not going on any name. Just it's an example, publicly available data. Okay. So same that it is there for a company, all the things will be same, opinion is there, basis of the opinion, following the standards, key audit matters, CAM is applicable to this particular one because they're listed. So CAM related details are there. Then information other than standalone financial statement and auditor's report. So other information, responsibility of management, responsibility of auditor, report on other legal and regulatory requirements. This is with respect to my Banking Regulation Act and section 133 of the act, that particular act. Okay. So as per section 29 of the Banking Regulation Act, read with 133 of the act. Okay. So that is one. Second, subsection 3 of section 30 of Banking Regulation Act, whereunder each auditor is required to report about whether all the information and explanation best to his knowledge has been received or has been found satisfactory. So obtained all the information and explanation which to the best of our knowledge and belief were necessary for the purpose of audit has been found them satisfactory or not. The transactions of the bank which have come to our notice during the course of audit has been within the powers of the bank. Since the key operations of the banks are automated with the key applications, okay, to the core banking system, the audit is carried out centrally as all the necessary records and data required for the purpose of audit are available therein during the course of audit or not, or during the branch visits. So this is something we are required to report as per Banking Regulation Act. Okay. This is something we are required to report as per the Banking Regulation Act. Now, the rest of the things, section 143 of the Act means Companies Act. Okay. Now, what we are required to report as per the Companies Act 143. Remember those standard sections, standard reporting that we have seen previously also. Those explanation, account required by proper account, books of account, P&Ls, statement, cash flow are in agreement with books of account, complying with the accounting standards, written representations about disqualification, then financial controls, then Rule 11 items which are there. Okay, and then again 197 that is already covered. So these are the items which are reported in the audit of an audit report for foreign bank. Any doubt? Just to show you the glimpse how it is there. Okay, we saw the normal audit report. Now, very important question. You might have already heard about long form audit report, where it is applicable then. We saw this is an audit report. Where is the long form audit report? This is not a long form audit report. So, where is the long form audit report applicable? Where that is applicable? So, where in which case it is applicable? Come on, guys, pretty easy. Good, Soham. I hope you get my question. I'm showing you an audit report, which is not a long form audit report. We have heard that long form audit report is applicable in the case of banks. Then, if that is the case, then why there is no long form audit report and we are seeing a different audit report? And trust me, this is not a mistake. Okay. So now this is an independent auditor report, which is there. Correct, Soham. So, Saksham, my question was, this is an independent auditor report, which is there. We have heard long form audit report. So, why we are not able, yeah, this is not in long form audit report, then why, this different audit report is there instead of LFAR? Why LFAR is not here? Correct, Saksham. Correct, Rakesh. So, LFAR is not for the public. Absolutely correct. When I talk about a particular LFAR, long form audit report, is not for the public. It is for the reporting to the board of the bank. Okay. Bank, that is done in LFAR format. So when you report to the board of the bank, okay, to seek their comments on the observations identified, that is something LFAR. That is something done in the format, this format. Normally, which is done to the public, we saw. So reporting to the public we saw, but reporting to the board of the bank is done in this format. That's the difference is there between both of them. Clear? See, I'll not invest much time into the schedules. I think which are already there, you're already covered in past in detailed one. Okay, I'll not go much into the schedules and the format of the financial statement for a bank, but we will be discussing LFAR. We will be discussing how we audit a particular bank. Okay, what are the things we need to take care, and with respect to the internal audit, internal financial controls, then the directions, RBI directions, requirements of LFAR, okay, and all such things, and then we will proceed with the respective questions along with that. Okay. So now, just to discuss about LFAR, okay, I'll start with LFAR. We'll take the audit report, we'll cover item by item, and we'll understand how the reporting is there for which items, and then we will again go and see that particular item. Now, LFAR is applicable to two particular type of auditors. So, in basically banks, either it is SCA or SA. SCA is the statutory central auditor. Or SA means statutory auditor. So in LFAR, there is a two bifurcations given for the SCA, that's a statutory central auditor, that the reporting requirement for SCAs, and in Annexure 1 and in Annexure 2, it is given for normal branch auditors or SAs. SCBs, that is statutory branch auditors. Okay. That's the part B for of LFAR. We'll see both, like, okay, what are the requirements for SCB also and SCA also. Okay. Now, to go in detail, I just want to understand from you guys how, like, do you know the difference between the central auditors and the statutory branch auditors? I know you might be having the understanding of that. Branch auditors is the auditors that have been appointed by under for a particular branch. Okay, and when I talk about statutory central auditors, they are the central for the whole particular entity. Okay. So that is the difference between both of them. So that's why there is a different applicability to central auditors and the branch auditors. Okay. Any doubt till now? Any doubt? Okay. If no doubt, let me go forward. I'll quickly cover this particular report. We'll not invest much time in this also. So what we are required to report for central statutory central auditors, SCAs, there are three areas. One, we report on the credit risk areas. Okay, the areas which are with respect to the credit risk. Then we report on to the areas which are market risk related. Third is the areas which is related to the governance, assurance functions, and operational risk areas. Okay. Now, what are these areas basically? And this is not the total areas; it's an indicative. So when this particular format is there, it's an indicative items. So what are these areas for statutory central auditors? With it, now, when I say credit risk areas, where there has been risk on particular to any of the loans and disbursement or facilities given to the customers. So any risk on from that particular side, that will be the credit risk area. So if you see loan policy regarding whether the sufficiency and effectiveness of the loan policy along with the compliance is appropriate or not, exposure norms, interest rates, and all such things are appropriate or not, credit assessment by the bank, sanctioning and disbursement policy, documentation for sanctioning of a particular loan, whether that is appropriate or not, reviewing, monitoring, post sanction supervision sort of such loans, early warning system, restructuring, resolution of stressed accounts, asset quality, what is the quality of asset, standard, substandard, doubtful, how much it is there from total exposure, recovery policy, what is the recovery policy and recovery steps on an overall level, which are the large advances. Okay, audit reports. When I talk about audit report, that is something with respect to other audit reports, other inspections that have been carried out for the bank, recovery records, who are the willful defaulters. So we need to report about all these areas, okay, whether they are appropriate or not. Market risk areas, where we are somewhat a risk is there with respect to the market. If we have any asset in the market like derivative contracts or something like that, so on basis of that we need to report. So investment in derivatives, then SLR, CRR requirements, asset liability management requirements. So these are certain areas for the market risk that are there. Then governance and assurance functions related areas. So the governance and assurance functions related areas will be like, risk awareness, risk taking, risk analysis of a particular, policy on that particular governance policy of an entity, of that entity, reconciliations of subsidiary records and control records, inter-branch reconciliations, fraud and vigilance related policies, suspense accounts and sundry deposits related, whether there are any suspense accounts or sundry deposits, KYC, anti-money laundering, cash and security items, parabank activities, MIS related. Okay. Then the fourth one is capital adequacy related. So in our remember when we were talking about even audit of NBFCs, we talk about something, capital adequacy, tier 1, tier 2 capital. Same way it is applicable to bank also. So when I talk about capital adequacy, the capital adequacy ratio is there or not. Then there is a stress test that is required to be conducted. So whether stress test is done or not. Okay. Then my going concern and liquidity related assessment, I need to report whether going concern assessment is performed or not, whether the entity is profitable or not, what is the return of investment, return on equity, return on asset, liquidity assessment has been done or not, liquidity coverage ratios, so all those things. Then I need to talk about IT related systems, then robustness of the IT related systems, IT security and IS policies, critical systems and processes. Then comes the other matters like accounting policies, whether they are appropriate, adequacy of the provisions for the statutory liabilities, adequacy of the provision for off balance sheet exposures like contingent liabilities, balances with other banks, revaluation of nostro accounts. Okay. Then compliance with DAF norms, compliance mechanism for like where there are various recommendations which are provided in various committees. Then what is the compliance mechanism to those particular recommendations, observations on working of subsidiaries, any other comment that we want to provide with respect to the customer service or complaint disposal mechanism, or any other matter that we should report, any other related to any area. So this is a particular coverage for LFAR with respect to an statutory central auditor. An overview, I'll not go and not perform the deep dive. Reason because a lot of areas, are related to certain particular specific provisions which are still not covered. So, any doubt with respect to this particular one? Any doubt? Okay. Okay. Let me cover then. Let me show you some with respect to the branch auditors, statutory branch auditor. I'll be covering to the questions part in a minute. Okay, like in few minutes, we'll be starting with the questions. Just to make you understand how the reporting works, I'm just showing you this particular one, and then we'll jump to the questions also. Okay. Now, this is the indicative format or coverage for the branch auditors. Now, again, for the branch auditors, we are required to report area-wise with respect to, let's say, for example, asset. Then I need to report for the asset, okay, cash. There are various such areas, whether does the system ensure that the cash maintained is effectively joint custody of two or more officials as per the instructions of the controlling authority of the bank? Okay, Dutch branch generally maintain cash balance which varies significantly from the limits fixed by the controlling authorities. Insurance cover available with the branch adequately meets the requirement to cover cash in hand and cash in transit. Okay. Balance confirmations, reconciliations, observations on the reconciliations. So some items on the cash which are there. Okay. Now, when I talk about a cash related activities, so to report this or to have a clarity on this particular area or to have a understanding of this particular area that okay, whether this has been done or not, we need to understand the procedures and the processes which are there at the ground level for the cash. So we need to understand whether those procedures or ground level things are appropriately being performed or not. For example, number one, does the system ensure that the cash maintained is effectively joint custody of two or more officials? I need to go and check the process for that. I need to go and verify. To report this, what I need to do, I need to see who is responsible for cash management. Okay, whether there is a two separate persons or not. Then have the cash balances at ATM and branch been checked at the periodical intervals as per the procedures prescribed by the controlling authorities of the bank? So physical verification. So I as we check for the physical verification of cash balances in companies in audit, same way I need to check whether the cash balance physical verification of the cash balance has been performed or not. I need to understand what is the prescribed frequency or procedure or periodic intervals that is there for this particular bank. Okay. So based on that, I need to understand physical verification has been done or not. Then with respect to, let's say, for example, does the branch generally maintain and carry cash balances which vary significantly from the limit fixed? So I need to understand what was the limit that was there for this particular branch. And I need to understand cash balances on various days to understand whether that was varying significantly or not. So whatever items are there in this particular report, we need to perform audit procedures accordingly to understand whether that particular item has been complied with or not, that whether that particular provision has been complied with or not. For example, in next case, let's say for example this one. So figure of the balance in the branch books in respect of cash which is ATM tally with the amount of the balances with respective ATMs based on the year-end scrolls generated by the ATM. So for that, again, you need to see the reports generated by the ATM or scrolls generated by the ATM. You need to compare with the book balance, and then you need to see whether there is any difference or not, and whether that is matching with the books of accounts of the branch or not. So comparison with bank's books and ATM scrolls to understand whether my balance is matching or not. Second, this is first we saw with respect to the cash. Second area is balances with Reserve Bank of India, State Bank of India, and other banks. Okay. So when we talk about balances, we need to understand whether balance confirmation was obtained or not in respect to particular, outstanding balances at the year end. We need to examine that, there should be any debit credit entity, whether it is debit credit charges, debit of charges, credit of interest that has we are not taken. So we need to understand while reconciling, first obtain the confirmation, then reconcile it for any of the items that have been not posted in our books. Okay. So we need to check debit of charges or credit of interest not recorded by us or by bank. Then we need to report upon cash transactions remaining unresponded if we have a cash transaction which is not responded. Okay. Revenue items requiring adjustment or write-offs based on the confirmation. This is based on the reconciliation that we have obtained. So observations on the reconciliation statement. So when we talk about reconciliation, whether these adjustments are required to be given, any other credit or debit entries originating in bank statement provided by RBI remaining unresponded for more than 15 days. Unresponded means there is an entry in the statement, but we are not accounting for. Okay, we are not accounted for. So we need to see for such statements, such items. Clear? So there is one question: how do we verify cash? See, cash verification, two things. Physical verification, you should be conducting on near to balance sheet date. Plus, if a physical verification already conducted by a management, we need to see whether what was the instruction rollout, what was the physical verification conducted, the items of adjustment identified. For example, bank said, okay, no, this is a physical verification. What do you say? done, and this is the amount of cash. This is as per book. There is a difference. Whether that difference was reconciled or not, what was the reason for the difference, whether the adjustment were passed or not. So those are things you need to understand with respect to the cash. Unresponded means we are not giving impact of that particular item. That is an unresponded. Okay. Then whether the branch maintain an account with the RBI, the fall, if yes, okay, then we are required to report on these particular items. Entries originated prior to but communicated or recorded after the year end and in relation to the currency chest or operations at the branch, okay, or withdrawal from the currency chest attached to the such branch, then we need to report such transactions. Okay. Any other matter related to the banks, balance with Reserve Bank of India or State Bank of India, then we need to report it here. Okay. Then money at call or short notice. So has branch kept any money at call or short notice during the year? Has the year-end balance had duly confirmed and reconciled? Has interest accrued up to the year-end has been properly recorded? Whether the instruction guideline, if any, laid down by the controlling authorities of the bank has been complied with. So you need to understand all these areas to report on particular this, whether they have complied with this particular area or not. So for example, has the branch kept money at call or short notice during the year? So whether it was this particular facility was obtained or not, you need to check records. Then whether confirmations were obtained from such other banks for this facility, when we have money at short notice. Then again, when we have a confirmations and and reconciliations, we can see interest has been accrued properly. So we need to do interest verification. Then comes whether the instructions and guidelines laid down by the controlling authorities of the bank, maybe board, maybe zonal branch, or whatever can be, whether they have complied with this. So you need to understand that will be case to case basis. So the compliance with the policies. Clear? Any doubt? Okay. If no doubts, let me take one question and I'll explain you how it can be covered in exam. Okay, how it can be covered. So let's say this is one MCQ that we are referring to. A branch of ABC Bank having 3 staff, 1 cashier, 1 officer, and 1 manager. The cashier was responsible for signing the cash slips, passing entries for cash withdrawals, and providing cash to the customers. You, as a bank's branch auditor, decided to verify the cash withdrawal transactions, and after testing, you decided to pass the control over cash process. Also, there were no observations identified during the testing. Moreover, as the process is present in the branch, work performed by the cashier is not monitored on daily basis. However, on quarterly basis, certain test checks are being performed by an officer of the branch. Internal audit team reported the state control over the process as operating. You are required to guide whether the reporting of the state control by the internal audit team is correct or not. So there were 3 person over there. That 3 person, one cashier, one officer, one manager. Cashier for responsible of signing of cash slips, passing entries for the cash withdrawals, providing cash to customers. Okay, there were some test checks performed at the end of the period. Now you need to say whether that is appropriate or not. This control is working appropriate or not. So you need to select one of the options. Which is the correct option? Which is the correct option over here, guys? Okay. Good, Bonnie. Good, Rakesh. Come on, guys. Pretty easy. Trust me. So what is the answer over here? What could be the thing? Good, Aniket. Okay, let us go options one by one. The first option is that the controls over the cash process, okay, should be reported in operating because no issues were identified during the testing of controls. Fine, that's good. Second, the controls over the cash process should be reported as operating as test checks being performed by the officer on quarterly basis. Okay. This control should be reported as non-operating because segregation of duties was not present with respect to the processing of payment of transaction by cashier. And third, last one, this control should be reported as the non-operating as the manager of the branch should have at least 2 officers for the test check of the cash transaction for processes. So see, now as per the the policy and the procedure, there should be a segregation of duties. There should be segregation of duty for a cashier, what he's performing, and what he what items he should perform and what items he should not perform. On the basis of that, there should be clear division of the roles and responsibilities. Here, that is not present. Here, if you see, the cashier is responsible for finding of cash slips, passing entries for the cash withdrawal, and providing cash to the customer. Everything is done by cashier only. So there is an issue of segregation of duty. This is an issue of SOD, segregation of duties. As a result, this control is not appropriately designed. There's a design ineffectiveness or design problem in this particular control, and hence we should not report this control then operating. We should report as a non-operating, because there was a segregation of duties not present. So the correct answer is C, not A, not B, and not D. Clear? Any doubts? Any doubts? Okay. Now, let us cover some more areas. We will see how it is related and how the question can come on these particular areas. Okay. Investment for the branch outside India. Okay. Now, for the investment branch outside India, what are the things that we are required to report? First of all, we are required to report whether the purchase and sale of investment has been, has a branch acted within its delegated authority. Whatever delegated authority will be there for the branch. Have the investment held by the branch, whether it's in own account or on behalf of the head office, have been made available for the physical verification. So physical verification of the investments. If the investments are not in possession of the branch, then whether the evidence has been provided with regards to their physical verification. Then, is the mode of valuation of investment in accordance with the RBI guidelines? And norms prescribed by the regulatory authority for the valuation of investment. Whether there are any matured or overdue investment which has not been encashed by the branch or has not been serviced, then we are required to provide the details of those. So that is with respect to my investments. Okay. Over and above that, when I talk about investment, to report these things, we need to understand what are the things that are there, the internal controls, the procedures which are there for the investment, formed and kept by the particular branch. Now, this was for the branches outside India. We'll see down there when it comes to the branch which is within the India on that particular area. Then okay. The next area I want to discuss is advances. Very important area for any of the bank. Okay. Now, with respect to advances, we are required to report these particular items. For this purpose, we need to examine the large advances of the bank, and we need to report whether the large advances are those in respect with the outstanding amount is in excess of 10% of the outstanding aggregate balance of the fund based and non-fund based advances, okay, of the branch, or 10 crores, whichever is less. Okay, so we need to report whether the large advances fall under this particular category. Yes or no, accordingly. Then we need to provide any critical comments that we have identified based on the review of the above advances on other tax checks that we have performed. We need to provide the list of accounts that we have examined, large advances. What was the account name? What was the account number? Balance at the year end, funded balance at the year end, non-funded, what is the total? We are required to provide this particular detail with respect to account advances. The outstanding, total outstanding of the branch, percentage examined. Remember, there is a 10% criteria that it should be in excess of 10%. B, credit appraisal. So we need to understand what is the procedure placed by the bank for the credit appraisals, like, generally complied with the procedure, whether the branches generally complied with the procedures, instructions of controlling authorities of the bank regarding loan applications, preparation of the proposal for grant and renewal of the advances, enhancement of the limits. So whether this has been appropriately done or not. If any shortcomings is there, then what is our comments on those shortcomings? Then have we come across any quick mortality of the accounts? Means, whether that any account has become NPA within a period of 12 months from the date of first sanction. Then we need to provide the name and the detail of the accounts. That is known as a quick mortality, that the account became NPA very quick. Okay. Then whether the borrower accounts has been are having appropriate interest rate, and the appropriate interest rate has been provided in the system. So the interest rate should be appropriately recorded in the system also based on the documentation. Whether the interest rate is reviewed periodically as per the guidelines. So some of the interest rates are floating interest rate, which changes with the change in the rate by the RBI. So whether they are periodically reviewed or not. Have we came across cases of frequent renewal or rollover of short-term loans? So if there is any renewal of short-term loans or rollover short-term loans, then whether we have came across such cases where it has been very frequently. Whether the correct and valid credit rating has been obtained and fed into the system for any of the advances provided. So that is, we are also required to check with respect to the documentation. Now when I talk about these particular areas, okay, I need to check the interest rate, I need to check what is it, frequent rollovers, I need to check for the credit rating, or I need to check whether quick mortality of a particular account. I need to perform the underlying audit. I need to check the underlying documents which are there to understand the particular account. So for example, to check whether there is a quick mortality, I need to go loan sanction date or advance sanction date. I need to see status as on 31st March or closing. Okay, I need to compare both, whether with this is within 12 months. I need to check whether it is NPA or not. Now, when I talk about NPA or not, how will I identify whether any account is an NPA? How can I understand whether a particular account is an NPA? To understand whether a particular account is NPA or not, I need to refer to the prudential norms. Okay, I need to go and check the prudential norms whether I can classify a particular account as an NPA or not. Okay, so To understand further onto the prudential norms, I'll discuss some example. Okay. Now I have taken some examples over here, and we'll discuss one by one, and we'll see whether the classification and prudential norms as per the prudential norm is there or not. First, I'll discuss the question, and then I'll jump to the provision. So, Mr. J obtained the loan facility in 2015 from the bank. During 2020, Mr. J obtained the benefit of the moratorium period, and the bank capitalized the interest of 3 months on 1,65,000, which was accrued during that particular period. Post that since August 2020 till 31st March 2021. Okay. No payment was performed. It's a miss over here. No payment was made by Mr. J for the outstanding amount. Okay. Now, bank has reversed the whole of the interest capitalized as bank classified the account NPA. Now, you tell me whether this account is NPA or not. Okay. And then we'll discuss further on the capitalization of interest and recognition of income. As of now, we leave the recognition of income portion. First, focus on the classification, whether this account is correctly classified as NPA. So, from August 2020 till 31st March, no payment was made. No payment was made for the outstanding amount. Whether this is an NPA account. Come on, guys, pretty easy. Okay. Good morning. Okay, good. Now, whether this is an NPA or not, let me explain you how we recognize a particular account as an NPA. Okay. So, when I talk about a particular account, okay, I need to understand this particular area is known as asset classification. Now, if the interest or installment payment if the interest or installment payment is overdue, for a period of 90 days or more, then it becomes NPA. Okay. If interest or installment payment is due, is overdue for 90 days or more, it becomes NPA. If the account remains out of order, okay, account remains out of order. Now this is for OD and CC account. And when I can call an account an out of order is if balance outstanding is more than sanctioned limit. Balance outstanding is more than the sanctioned limit for greater than 90 days, or the outstanding balance is less than sanction limit, but credits in last 90 days are not sufficient, or enough to cover interest debited in the account. If these two conditions are there, then I will call it as an out of order. Okay. Then with respect to the bills, if they remain overdue, for a period of 90 days or more, then they become non-performing. In case of agricultural loans, okay, now agricultural loans are short duration crop loans and long duration crop loans. So for short duration, if the principal or interest overdue for two crop season or more, then it will become NPA. Now for long duration, same. If my principal or interest is overdue for one crop season, then it will become NPA. So based on this classification of NPA, you tell me whether this will be NPA or not. Okay. We discussed the provisions, how to classify NPA in a bank, okay, as per the prudential norms. So in this case, whether it will be an NPA or not, Come on, guys, pretty easy. We discussed the provision. There has been no payment since August 2020 till 31st March 2021. So there is no payment for around almost 6 months now on this particular account for the amount outstanding. So whether I'll classify this account as an NPA? Yes, I will classify this account as an NPA because the amount is overdue for 3 months or more. Okay. So that's why it will be NPA. As the classification is correct. It's an NPA. Okay. Now, then Mr. R obtained the OD facility from the bank. The amount sanctioned was rupees 12 lakh. On 31st December 2020, the amount utilized in outstanding was 12 lakh 65,000. Okay. Since then, the balance had remained in excess of the sanctioned limit. Mr. R made payment of 3,45,000 in month of March 2021. The closing outstanding amount on 31st March 2021 was 13,45,000. Bank did not classify the account as an NPA. Payments were being made by the account holder on regular basis. So you tell me in the current case in question number and point number B whether this account will be classified as an NPA. Whether you will classify this account as an NPA or not. Correct, Bonnie? Okay. Okay, Aniket. Good, Shailendra. Come on, guys. Pretty simple. We discussed the provision as of now. Yes, this account will be classified as an NPA because the sanction limit, the amount outstanding was more than the sanction limit for a period of 90 days. Remember, I just discussed this particular item. Account remain out of order, then it will become NPA for OD and CC. And how it will be classified as an out of order? If the balance outstanding is more than the sanction limit for a period of 90 days. If that is the case, then I'll classify the account out of order and that will be NPA. So in this case, the account is out of order. and hence it will be classified as an NPA. Okay. Number C. Now in this question, I'll just give me a minute. I'll do a bit of. Okay. Okay. In this question, Mr. A obtained the OD facility from the bank of rupees 10 lakh on 1st April 2020. Mr. A utilized only 3,50,000 during the whole year. Following it, the interest credited and amount interest debited and amount credited by Mr. A. An amount credited by Mr. A in his account. So interest debited 40,000 during 1/10/2020 to 31/12/2020, and for 1/1/2021 to 31/3/2021, the interest is 40,000 and 45,000 respectively. In front of that, the only credit is 12,000 and 5,000. Bank classified the said account as an NPA on 31st March. You tell me whether the account has been correctly classified or not. Whether this particular account was correctly classified as an NPA or not. Pretty easy. We discussed this provision also. Okay. Good morning. Okay, Aniket. Okay, Shailendra. We need to understand as per the provision whether this account classification is correct or not. And based on the account classification, you can check whether the items that are required to be reported in LFAR. So see, it's directly related. If I want to report anything in the LFAR, now we are talking about the disbursements. Okay, we will be seeing monitoring. We will be talking about review. In that case, it will come about the NPAs. It will come how the prudential norms, asset classification, provisioning, and advance. So we will check whether whether this particular prudential norms has been complied with or not. So to understand whether they have been complied with or not, we need to understand what are the prudential norms. So we need to report on that particular matter. We need to understand this particular area or this particular provision has been complied with or not. So in the current case, remember what I told you is if the outstanding balance is less than the sanction limit, my outstanding balance is less than the sanction limit, but credit in last 90 days are not sufficient to cover the interest debited. My outstanding balance is less than the sanction limit. That is there. That's not a problem for me. But the credit in last 90 days are not sufficient to cover the interest debited. In our case, what is the scenario? The amount of interest being debited 45,000. In front of that, we have only 12,000 and 5,000 amount credited. This is not 90 days, but this is more than 90 days. This is 6 months or 180 days. So I can say in last 180 days, which is obviously more than 90 days, the amount credited is less than the interest debited, and hence bank has correctly classified it as an NPA. This will go into NPA. Clear? Any doubt? Any doubt? Okay. If no doubts, let's take a quick 10-minute break. We'll gather back after 10 minutes and we'll discuss more questions on this particular prudential norms. Yes, the overdue period is calculated after the end of moratorium period. So see, what is the moratorium? That's called a gestation period. You are not required to pay anything during that period. Okay, so that's the moratorium basically. And if that particular amount is not required to be paid in that particular period, then how it can become overdue? First of all, it's not even due. If it is not even due, then it cannot become overdue. So that's why everything is required to be calculated after moratorium period. Any further doubts? Okay. If no further doubts, let's then take a quick 10-minute break and we'll gather back after 10 minutes to continue further. Okay. Let's take a quick 10-minute break. Hello everyone, welcome back. So let's discuss the prudential norms. It's on the same line that we discussed in the NBFCs, standard, substandard, doubtful, loss assets, then SMAs. They're all on the same line. Okay, so sorry, yeah, they're on the same line as compared to the NBFCs. Okay, so let's move forward and discuss some further. Mr. H obtained the OD facility from the bank. The facility was secured on stock of the customer. As per the requirements of Mr. H, as per the requirements, Mr. H was required to submit monthly stock statement. So he was required to submit monthly stock statement to the bank for calculation of drawing power. Mr. H submitted the stock statement on 1/7/2020 for the month of June, post which no stock statement was submitted by Mr. H. On 31st December 2020, Mr. H submitted the stock statement for month of July 2020. So on 31st December, he submitted the stock statement, but that was for the month of July, not for the month of December. So he has only submitted the stock statement till month of July. Okay. Till 31st March 2021, no further stock statement was submitted by Mr. H. The drawing power was last calculated based on June 2020 stock statement, post which no revised calculation were made by the bank. Upon inquiry, it was identified the bank did not bother to collect the stock statement as they were aware about the good financial position of Mr. H. Bank classified the said account as a standard account. You tell me whether this account classification is appropriate or not. Whether this account classification is appropriate or not. We need to understand the requirement of the norms and how the asset classification is required to be done. This is something related to the drawing power calculation, and this concept is known as account with temporary deficiencies. So this is drawing power calculation and account with temporary deficiencies. But again, that has to be done with in respect to the classification of the NPA accounts. So I'm waiting for your answer, guys. Whether the classification standard account is appropriate or not. Okay, let me tell you a particular provision on this. So there is a concept known as account with temporary deficiencies. Okay, account with temporary deficiencies. Now, what are these accounts? These accounts are such accounts which are, like having some temporary deficiencies with respect to some documentation, some fulfilling of requirements. So they might have temporary deficiencies under this particular account. But are we required to classify these accounts as a NPA? That depends upon the type of deficiency, the period of deficiency that is for present in this particular account. Okay, so generally the provision says that the prudential norm says that when an account is there with a temporary deficiency, okay, when an account is there with a temporary deficiency, we need to understand what is the basically temporary deficiency about is. Okay, so let's say for example, a particular account is there, okay, and there is a temporary deficiency that okay, some documentation is pending, or some non-availability of drawing power compared to the latest stock statement, balance outstanding exceeding the temporary balance outstanding is exceeding the limit temporarily. So those accounts should not be treated as an NPA. Okay, so I'll give you an example over here. Let's say balance outstanding more than my sanction limit, or latest stock statement not available, or non-availability of adequate drawing power, okay, or non-renewal of limits on that particular account. Non-renewal of limits on the account, okay, on due date basically. So these are certain things which are temporary in nature, and hence because of this I cannot classify my account as an NPA because these are temporary. However, there are certain conditions attached to it. Let's say for example temporary. When I talk about temporary, what I do mean by it, like okay, if let's say balance outstanding is greater than the sanction limit, I can say okay, this is a temporary. But if this irregularity or this problem is for a continuous period of 90 days, then the account will become NPA. So if anything is less than 90 days, any such thing is less than 90 days, then no NPA is required. Okay, over these accounts, no NPA recognition is required. If that increase the limit of 90 days, then I'm required. In case of stock statement, in case of particularly stock statement, okay, my drawing power, my calculation of drawing power should be based on the stock statement that should not be less than or older than 3 months. So if drawing power is calculated based on stock statement which is 3 months older, 3 months or older, then this account will be termed as irregular account. Okay, this account will be termed as an irregular account. And such irregular accounts, okay, if they are irregular, if any account is irregular for a period of 90 days or more, a period of 90 days or more, then that becomes NPA. In our case, last stock statement was submitted on July, okay, but the drawing power was calculated based on June. So my drawing power in current case is calculated on June 2020 stock statement. Now, if the drawing power is calculated based on 3 months or older stock statement, that becomes account irregular. So in the month of September, this account became irregular. And after 90 days of irregularity, of continuous period of 90 days, this account become NPA. So an irregular account will become NPA in that case. So in our current case, the stock statement was not submitted. So within 90 days, it will become NPA. Clear? Any doubt till now? Not submitting stock statement is a deficiency, which is a temporary in nature. But if you continue for 90 days, it becomes irregularity. And then on the basis of that, you need to classify the account as an NPA. So account with temporary deficiencies can become NPA if the period of irregularity is for more than 90 days. In the same way, this account is irregular for a period of more than 90 days, and hence this will be classified as an NPA. Clear? Any doubt? I hope you guys are clear based on this this concept. Account with temporary deficiencies. Any doubt, guys? Any doubt? Yes, for most of the cases, it's 3 months. So the question was whether for all the state cases, is it 3 months or 90 days for NPA? It's 90 days basically, not 3 months. So it is 90 days we need to consider. Any doubt? Okay. If no doubt, then let me take one more question. Okay. CA Prachi was conducting statutory audit of branch of a nationalized bank for year 21-22. While reviewing the operations and documents paper of a borrower enjoying overdraft credit facility of 50 crore availed against security of the stock and book debts, the following observations were jotted down by her. The balance in overdraft credit facility as on 31st March 2022 was 55.65 CR. The balance in the account exceeded the sanction limit during the whole month. As per the terms of the sanction letter, stock books debt statement were required to be submitted monthly. Latest available stock and book debt statement for the month of February 2022 showed a drawing power of 48.5 crore only. However, stock and debt statement of the previous month showed adequate drawing power. Stock audit of the borrower was also conducted during the year by one of the empaneled stock auditors of the bank. Stock audit report dated 31st December 2021 placed on the record showed adequate drawing power in the account. However, it has commented adversely on the declining turnover of the borrower in 21-22 till the date of stock audit report as compared to the proportionate turnover in the preceding year. The renewal of the overdraft facility was due on 20 October 2021. The account was short renewed by the competent authority for a period of 3 months pending submission of complete papers. However, the borrower has not submitted the complete renewal paper till 31st March 2022. There is a request letter from the borrower on record stating that the valuation report of a property located at a faraway location was taking time. So this is a particular scenario. Now, the branch has classified the particular account as in standard account, standard asset. Considering above, you need to comment whether this particular account is standard or not. Pretty easy, guys. We have discussed all these things as of now. On the basis of that, we need to answer this particular question. You need to tell whether the account is correctly classified or not. Come on, guys, pretty easy. So here we need to report whether this account is standard asset or not. We need to, check the provision that we discussed now. So there is a question that for the renewal of limit, adequate DP, etc., it is there 3 months irregular, and then 90 days it becomes NPA. So yes, it's correct. So total, it comes near to 180 days. If for the 180 days it has not been reviewed, then yes, it will become NPA. Come on, guys, pretty easy. This has been asked, like, this has been a question which can come into an exam also. Whether you will classify this account as a standard asset or a non-performing asset. Okay, let's go one by one with each and every provision in this question. Okay. 1. The balance in overdraft credit facility as on 31st March was 55.65 CR. The balance in account exceeded sanction limit during the whole month. Okay. Now, so they are saying the balance in account exceeded the sanction limit during the whole month of March 2022. So what is our provision with respect to over usage of sanction limit? So if an account, if the balance in an account, overdraft account is more than the sanction limit, for how many months or how many days to calculate that particular account as an out of order and to report as an NPA? What is the period? So if a balance in overdraft is more than a particular, sanction limit, and if that particular period has been, passed, like what is the period to classify that account as an NPA? The period is 90 days. So it should be more than 90 days to classify as NPA. Here it is less than 90 days, it's only being 1 month. So I'll count as a temporary deficiency. Okay. I'll not count as a, NPA, I'll count as a temporary deficiency. So as far the first point is concerned, it is good for me. Second, sanction letter, stockbook statement are required to be submitted on a monthly basis. Latest available was February 2022, showing a drawing power of 48.5 CR only. How a stock statement, stock book and debt statement of the previous month showed adequate drawing power. So what is the with respect to the stock statement we discussed now? How much older should not be the stock statement? Like how much older should be, cannot be a stock statement in order to calculate a drawing power? Older than 3 months, we just now discussed. It should not be more than 3 months older. But in our case, it is not older than 3 months. So this will not be applicable. This is fine. And this again, I will classify as a temporary deficiency. Okay. Then there is another particular area that I want to discuss over here is with respect to some of the like critical accounts, there is a requirement for the stock audit. Okay, annual stock audit. If the account balance has 5 CR or more, annual stock audit by external agencies appointed as per the board is mandatory. Okay, and to in that case also we need to understand what is the drawing power and what was the calculation performed. So here if you see the amount is 50 CR, which is more than 5 CR. So annual stock audit is applicable. Okay, if annual stock audit is applicable, that has been carried over here, and stock audit report for the 31st December 2021 placed on record showing adequate drawing power in the account. However, they commented adversely on the declining turnover of the borrower in the year 2021-2022. Okay. Now, comment on the declining turnover, it's fine. It's nothing such thing, which can, focus or keep, ask me to keep my account NPA. There's a turnover declining. Fine, that's a comment. Okay, agreed. That has nothing to do with my, requirement of the prudential norms. Compared to previous year, there was a turnover decline. Fine, we know that. Okay, nothing to do with my prudential norms. Stock audit done. So stock audit done. That's good. And the drawing power was calculated and it was appropriate. Okay. And that was done for the 31st December only. So again, within 3 months, that's there. Then the last point, the renewal of overdraft facility was due on 20 October 2021. The account was short renewed by the competent authority for 3 months. So from here, it was renewed for 3 months. So 20 October to 3 months. That will fall again somewhere in the 20th Jan. Now, post which, they was required to submit the papers, but papers are not available due to some issue. Until 31st March, the papers are pending. However, the difference between this is less than 90 days. The difference between this is less than 90 days. Okay. So if this is less than 90 days, then again, this account is not irregular. And if this account is not irregular, I can again consider this as a temporary deficiency. So this is fine for me. I'll consider it as a temporary deficiency. As of now, there is not a single provision which can ask me to classify this particular account as an NPA. Not a single particular area which can ask me to classify this account as an NPA. So this account is standard and that is fine. Let us see how the answer has been done. The borrower was enjoying credit facility of 50 CR against security of stock and debts. Through the latest available stock statement for the month of February 2020 showed the inadequate drawing power. There was adequate drawing power available throughout the year. The stock audit report on 31/12/2020 also reflected adequate drawing power. Hence, it shows that the borrower had adequate drawing power during the year. Further, comment on declining sale is general informative value to the management for making credit decisions. Then, the fact of overdrawings in the account during the month of March and inadequate drawing power in the month of in a month are in nature of temporary differences and do not require to be classify the account as an NPA. RBI instructions laid down ordinarily credit limit need to be reviewed not later than 3 months from the due date. As per the guidance note on audits of bank, in case of constraints such as non-availability of the financial statement and other data from the borrowers, the branch should furnish evidence to show that the renewal of credit limits is underway and would be completed soon. In any case, beyond 6 months is not considered as a desirable as a general discipline. Hence, an account where the credit limit has not been reviewed or renewed within 180 days from the due date will be treated as an NPA. This 180 is nothing but 3 months plus 90 days. It would be pertinent to note that the counting of 180 days would be required to be done from the date of original due date for the renewal and not from the date of expiry of short reviews or technical reviews. In the instant case, the original renewal date was 20 October and the period of 180 days has still not expired on balance sheet date. Keeping in the view of all above factors, CA Prachi should accept the classification as a standard asset made by the branch. Clear? Any doubt? So in any of the case, I will not treat this as an NPA. It will be a temporary difference. Any doubt, guys? Very important question to understand. This is the basic application of you can say the prudential norms that we are discussing. See, there is one point again. There are few questions. One, the first question is that 1 month per stock statement in question is not relevant. See, 1 month stock statement is pending, that is fine, that can happen. Okay, and if that statement is pending, we need to see when was the last drawing power calculated, whether it is based on 3 months older stock statement or not. Basically, it should not be more than 3 months older stock statement. And with respect to the documentation, when where 1 month stock statement is pending, that is fine. It's not an issue, and this will calculate it as a temporary deficiency, not NPA. So they can submit later on the 1 month pending stock statement. But again, my drawing power at any point in time should be calculated based on the stock statement, which is not older than 3 months. Okay. Now the second question is with respect to point number 4, renewal of overdraft facility. See, as I told you, there is a 180 days calculation, like 3 months plus 90 days. So when I need to calculate this 3 months plus 90 days, what I need to do is I need to take the original due date and I need to see, okay, till 3 months I can be there, I can term as an account, irregular, but over and above that, if it is irregular for 90 days, then it will become NPA. Now, the original due date was 20th October. It was for the period of 3 months, like it was short renewed. But after that, even till 31st March, there was no data provided for that particular renewal. So for the, for this calculation, what I'll do is I'll take the original due date of 20 October. I'll calculate 3 months. That's the 20th Jan. Then the account will start become irregular. And then again, I'll have 90 days. If the irregularity is for the 90 days, then it will become my NPA. That's the 180 days criteria. So on 31st March, the 90 days has still not, elapsed. And hence, this account is irregular, but not NPA. I hope I'm correct. Oh, like, I hope I'm, clear. Any doubt with respect to this? Any doubt, guys? Okay. The focus today will be, on practical side of the prudential norms only, because it's very important to understand the practicality. Okay, we know we are required to report in the long form audit report, but how, that is very important. How we need to see it's very important. Okay, let me take one more question. This is a part of a bigger question. I'm just, taking one part out of it. Now, there is an account. The point number 2 we are discussing over here. Okay, there is an account for which an ad hoc limit has not been reviewed for a period of 180 days from the date of such ad hoc sanction, and such account has been treated as a performing asset in the books of account. You tell me whether this classification is correct. Whether this classification is correct or not. Okay, good, Shailendra. Come on, guys, whether this classification is correct or not. very important to understand. See, I'm taking the examples of same particular provision so that you can have a clarity. And these same provisions, help you to these same provision examples help you to understand and the particular provision that we are discussing. Okay, good Rahul, good Aniket. So in this case, again, when I talk about ad hoc limits, even like this temporary difference, temporary account with temporary deficiencies that also contain one of the criteria for the ad hoc limits. Okay, generally, for the ad hoc limits also the period is 3 months. We need to review or regularize not later than 3 months. So ad hoc limits should be not later than 3 months. Or regularized. It should be less than 3 months. Okay, but again, beyond 6 months, that is 180 days, it is it will be treated in NPA. So if crosses 6 months, or let's say I'll take 180 days only, it will become NPA. Okay, if 3 months, it's irregular but not NPA. Once it's crossed the 180-day mark, it will become NPA. So ad hoc limit reviewed or regularized after 3 months, it's irregular. After 180 days, it's NPA. Simple. And in the current case, whatever in example that we were discussing, it has not been reviewed for 180 days or more. Not been reviewed for 180 days from the date of such ad hoc sanction. Hence, this classification is incorrect. It should not be performing asset, rather it should be NPA. Clear? I hope I am clear. Now this particular 180 days calculation should be from original due date. Original due date. Ad hoc limit means ad hoc, like something, I gave a limit to a particular account holder, a particular ad hoc limit till the time he submits me the paper. So let's say, for example, a particular customer came to me, I need a urgent funding so that I can continue my business. I have a good relationship bank. I'll be submitting the documents. You calculate the drawing power and then you give me the appropriate, limit. But as of now, give me some limit, an ad hoc limit, so that I can continue using the facility and I can run my business for the working. I need working capital. Okay, so bank told us, okay, give me your last financial statement. Based on that, bank calculated a drawing power and gave a limit. Let's say, for example, I gave a limit to that particular person. Okay, now this is your 5 lakh rupees drawing power. Okay, based on the last year's financial statement or some document which I reviewed, but not all documents are submitted, like latest stock statement or latest position, everything. So I told him, okay, I'll give you this ad hoc limit for 3 months. Meanwhile, you submit me all the documents, and then I will convert this ad hoc limit into a proper account. Okay, that's something ad hoc limit we are talking about. Okay, one more area I want to cover. Let's say, for example, Mr. X was having 3 facilities with ABC Bank. Okay, one was OD facility, one was his term loan against property, basically, or you can say term loan or something like that. Okay. And third was loan against property. Okay. We call it LAP. Now, I'll explain each of the case in detail and then we'll discuss. Okay. Now, OD facility amount, let's say in all of three, amount OD facility was rupees 5 crore. Term loan was rupees 10 crores. And loan against property was rupees 15 crores. Okay. Now, conditions are attached to each and every facility. Let's say here the condition was to submit stock statement monthly. Here the condition was ECGC cover or guarantee, basically. So in some of the cases, you will see, there are guarantees provided by the central government or the state government, or you can say, guarantees provided by, what do you say, export credit, corporations. So that, for certain classes of loans and for certain classes of facilities. In that case, if there is any what do you say, it is ECGC guarantee cover they are available, then it's fine. So ECGC guarantee cover was required in this particular role. At 50%. Okay, this was the condition. On here, it was required that security of rupees, let's say 20 crores was necessary. And these are the conditions for each and every facility. Now the conditions fulfilled. Now here it was required to be submitted stock statement monthly. Last stock statement was provided on August 2021. Okay. Post which no stock statement has been shared. Here the cover was provided at the rate 50%. Here the security was valued at rupees 20 crores at the time of sanction of loan or facility. Okay. So this is the condition. As on March 2022, 31st March, as on 31st March 2022, we need to do classification of accounts. So I need to perform the classification of these particular accounts. Before that, I just want to add one more thing over here. Drawing power last calculated based on, okay, August 2021 was rupees 3.5 crores. Okay. Now there will be no drawing power because these are the different facilities. Okay. Now this is the scenario. Mr. X has these three facilities: term loan, OD, and LAP. Amount 5, 10, 15. Conditions to submit stock statement monthly. But in OD, it was submitted last on August. Drawing powers was calculated was 3.5 CR in August. Since then, it is, okay, I'll tell you the closing balances also. Closing or outstanding balances. Here, the outstanding balance was 5.5 CR, or you can say not 5.5. It was, let's say, for example, 4.5 CR. And throughout the year, it was more than 4 CR. Okay. Throughout the year, it was more than 4 CR. Here, the term loan of 10 CR, the closing balance was, let's say, 8.5 CR. And here, the closing balance of this particular loan against property was, let's say, 13 CR. Now, you tell me what you will classify, which account as per, classification prudential norms. What will be the classification of these accounts as per the prudential norms? As on 31st March. Pretty easy, guys. Either the account is performing asset or NPA, non-performing assets. You need to tell me whether the account is, go one by one and tell me whether the account is a performing asset or a non-performing asset. So these are the three facilities that has been obtained: OD facility, term loan, and LLP. Amount 5 CR, 10 CR, 15 CR. Condition was to submit stock statement monthly over their ECG cover and security. In first one, OD facility, stock statement was only submitted in till August 2021, post which it was not submitted. In both rest of the both, ECG cover was provided and security was provided. Drawing power calculated in OD was 3.5 CR in August 2021. And throughout the year, the amount which was drawn from the account was more than 4 CR. And closing was 4.5 CR. In rest of the cases, as per the payment, the outstanding balance is 8.5 and 13 CR. Good, Bonnie. So you need to tell me which account will be NPA and which account will be, performing asset. Pretty easy, guys. We have already discussed the provision. Come on, guys. Pretty easy. Good, Shailendra. So I received two answers, one from Boni and one from Shailendra. Very good. Quickly, fast, because we have already discussed this provision, and pretty simple. Good. So either it can be NPA or either it can be performing asset or standard asset. Two options: NPA, non-performing asset, or standard asset. You need to classify each. Okay. Remember the conditions in the prudential norm. If for out of order account, if the balance outstanding is more than sanction limit for 90 days, then it will become an NPA. Plus, if there is a deficiency, like balance outstanding is greater than sanction limit or latest stock statement not available, then I have a 180 days. But beyond 180 days, again, I need to classify as an NPA. In my question, this particular OD facility was 5 CR. Okay, the last stock statement was submitted on August 21. Post which there is no stock statement available. Means the last statement is more than 3 months older, and that has been past 180 days. So like the 180 days criteria has been fulfilled over here or past. So this account is a non-performing asset. Plus the drawing power is more than the the amount used is more than the drawing power. So the drawing power calculated was 3.5 CR. But I have used more than 4 CR throughout the year, and closing balance was 4.5 CR. Remember, in my prudential norms, we discussed if I am using more than my drawing power. If drawing power is calculated based on lesser older than 3 months stock statement, okay, and that if that has been 180 days has passed, then again it will be NPA. Out of order, balance outstanding more than sanction limit. So in this case, this will be treated as NPA. Okay, there are various reasons for why this will be treated as an NPA. Am I clear? Till this point, everyone with me? Till this point, any doubt? Rahul, Aniket, Boni, Shailendra, any doubt till this point? Okay. The moment I recognize a particular account as an NPA, I will recognize the rest of the accounts as an NPA. Why? Because my asset classification is not facility wise, but it is borrower wise. So very important point. Asset classification is borrower wise, not facility wise. If one of the facility of the borrower becomes NPA, my all facilities will be termed as an NPA. Okay, Rahul. Understood. Clear this one? If one of the facility of a borrower becomes NPA, all the facilities will be termed as NPA because my asset classification is borrower wise, not facility wise. So if this is NPA, hence this will become NPA and this will become NPA, irrespective of whatever they are doing it appropriately. Clear? Am I clear? Asset classification should be done on the borrower basis, because if there is an issue in one of the facility, then it becomes difficult, okay, to envisage a situation when only one facility of a borrower is in issue and rest are fine. It cannot be the scenario. Okay, like just imagine a situation where in one of the loan, borrower is not able to pay because there are some financial issues, and rest of the facilities he is able to pay. As of now, he might be, but because problem is at the borrower level, we need to classify all the asset on that borrower level as a non-performing asset, not a particular facility where he has a delays or issues. Hence, all the accounts in the current case will be NPA. So I'll not classify any of the account as an performing asset or standard asset. No, all the accounts will be classified as an NPA. Good. Okay. Now, the next very important point I just want to discuss is, once we classify an account as an NPA, how to classify as in various categories of assets. Okay. So there are two types of classifications. There are two types of asset classifications. One is your before NPA. Second is your after NPA. If a asset is, any person, if a person misses a payment on any of the account, it becomes overdue. Before NPA, it will classified into three categories. That is SMA 0, SMA 1, and SMA 2. Remember in NBC and NBFC also we saw this special mention accounts before becoming NPA. But once it becomes an NPA, I will classify as a substandard, doubtful, or loss asset. Okay. Once asset becomes NPA, it will be classified into various these categories. So Rahul, your question, like what happens when the account gets classified as an NPA? What is the next course of action, and will the borrower has to pay all the amount back immediately? We'll understand that in a while. I'll be coming that on that particular point also. But as of now, we'll go step by step. I'll be reaching on the portion of the recovery. Okay. So before NPA and after NPA. So these are the two classifications that are there. Okay. I'll go with before NPA. Oh, after NPA first. Asset classification after NPA. Pretty simple. On the same line that we saw in the NBFC, it's on the same line. There is nothing different over here. Okay. Sorry. So I'll explain one by one and their periods, like, okay, when it becomes substandard, when it becomes, doubtful, and when it becomes your loss asset. Okay. Now, an asset becomes substandard if your NPA, the account has remained NPA for a period less than 12 months. If the account was NPA for a period of less than 12 months, I'll classify as a substandard asset. If the account was NPA for a period of more than 12 months, it will be doubtful asset. Again, we have bifurcations in doubtful asset. Okay, we'll see at the time of provisioning, but there is a bifurcation in doubtful asset. Now, the loss asset. How to classify loss asset? Loss asset is something, which has been identified by bank, internal or external auditors. Okay. Has identified by banks, internal or external auditors, or RBI inspection. Now, but the amount has not been fully written off in the books. For example, if the asset is there which has not been written off, but the bank or internal or external auditor or RBI thinks that the amount is not recoverable or is uncollectible, okay, and is of such value that its continuance to the bankable asset is not warranted, or its recovery or salvage is not possible, at that point in time, what will happen is it will be recognized as my loss asset. Clear? Sorry. So it is identified by a bank and it has not been fully written off. Then it will be taken as a loss asset. Now, once I decide these particular asset classification, then on the basis of that, I need to apply for the provision. I need to classify for the provisions. Okay. But before that, what I'll do is I'll explain you about the SMA, special mention account, that is before my, what you say, before NPA classification. Okay. Now, in case of a default by lenders, I need to classify the accounts into various categories, in 3 categories. That is SMA 0, SMA 1, and SMA 2. That is, if the principal or interest amount, if the principal or interest is outstanding, okay, whole or partly, or overdue, outstanding or and overdue. up to 30 days, then it will be SMA 0. If it is more than 30 days, but less than 60 days, then it will be SMA 1. If it is more than, the amount overdue is more than 60 days, but less than 90 days, greater than 60, less than 90, in that case, it will be SMA 2. If it is more than 90, it is NPA. So that's why if it is overdue till 90 days, it will be classified under SMA 012. That is for the loans. Or other facilities. Now, specifically for revolving credit facilities. Now, which are revolving credit facilities like cash credit overdraft, CC and OD. In that case, there are only two categories, SMA 1 and SMA 2. Okay, and for that, the calculation criteria is simple. Outstanding balance in excess of sanction limit or drawing power. If my outstanding balance is in excess of drawing power or sanction limit, then I will classify SMA 1, SMA 2. See, till the month end, I will not be able to say that he has increased drawing power. I cannot calculate on the basis of day wise that okay, now this is the day one he has increased his drawing power. It can happen. That is fine. That's why we have two categories, SMA 1, SMA 2, not a SMA 0. So if it is more than 30 days, more than 30 days, but less than 60 days, that is SMA 1. If it is more than 60 days, less than 90 days, this is SMA 2. Above 90, again it will go for my NPA. And this requirement, this classification is required to be done at the end of the day. Okay. So as a part of day end, I'm required to do this. So when I talk about this zero limit over here, this one SMA 0 up to 30 days, that's I'm required to check from day one, like when the amount became due. Let's say amount was due on 30th September. Okay, amount was due on 30th September, but the person did not pay that amount on 30th September. What I'll do in that case, if the amount has not been paid by 30th September by that particular person, as a part of day closing, I'll classify that as an SMA 0. Okay, I'll classify that as an SMA 0 because I need to check for the day end closing. Clear? Any doubt? That is before NPA classification. See, I'll tell you, it is possible. So there is one question. How it is possible to draw 5.5 CR when the OD limit is 5 CR? See, what happens is, some of the customers are given facility to overdraw, but there are charges involved for overdrawing. So let's say, for example, you have a credit card. There's a limit in the credit card. Some credit card, doesn't allow you to swipe more than the credit limit that you have. But some credit card do, and they have charges for over limit usage. Okay. Once you use more than your limit, they will charge you for that over limit usage at some particular amount. Same way, some facilities have that feature that they will charge you for the over limit usage in a particular OD or CC. But you can do it in certain of the accounts. It's possible. But you need to regularize. Or let's say, for example, you drawn full amount. Let's say 5 CR amount was there. You draw full amount. Like you on the first day, you took out full OD or used full OD. Now, subsequently, the interest will come on the account. Now, that interest will get accumulated on the outstanding amount. If you have already drawn 5 CR from the account, the interest which will go into the account, which will be debited, okay, that will increase your outstanding amount more than 5 CR. Then that will become, you have outstanding balance more than the sanction limit. In both of the cases, it can be there. I hope I'm clear. Okay. Any doubts? Any doubts till now? Okay. If no further doubts, guys, what I'll suggest is in the next lecture, what we will do is we will cover the rest of the portion of the bank audit, prudential norms. My major focus will be on practical side of the prudential norms, not on the theory. So I'll try to cover the maximum prudential norms through the practical questions that will be helpful to you also in your exam. But for that, I have one request. Please go through the study material. Okay, the ICI study material and the chapter on the bank audit, they cover the prudential norms in detail, area wise, asset wise, and everything. They have in detail SLR, CLR requirement. So when I will cover through a question, you will have a clarity, okay, what I am discussing. If you are not aware about the norms, if you are not aware about the guidelines or the directions, it will be very difficult for you to understand. Okay. So a request, please go through that particular chapter before next lecture. My major focus will be on the practical side like we did today. And same way we will continue in next lecture. Okay. If no further doubts, I propose to close this lecture today. I'll see you in next lecture. Okay. Thank you, guys. Have a nice day. Thank you.